So naturally, the price is crashing, down over 70% from its all-time high, bleeding while everyone's screaming buy the dip. Wallet number 1 adds 35 million KAS in 10 days. BlackRock-backed Mara keeps mining it like there's no tomorrow, and 700 million tokens vanish from exchanges. And yet, red candles. Every single day. This doesn't add up, unless it does. And trust me, by the end of this video you'll understand exactly what's happening here, why whales are quietly loading up, and whether this is your last chance to get in cheap or a slow-motion disaster waiting to happen. What's up, crypto fam? Welcome back to the channel. If you're new here, I break down the crypto market without the hype, without the hopium, and definitely without telling you to just hold and pray. Real analysis, real data, real talk. If you want more of that, smash that like button right now, and subscribe so YouTube actually shows you my videos. Hit the bell icon too, because things are moving fast in this market, and you don't want to miss what's coming next. Now let's get into this Kaspa mystery. According to Kaspa report, the Kasia messaging protocol, built on top of Kaspa, just exploded. Message traffic has soared since early November, and get this, nearly 95% of all Kasia transactions happened this month alone. Over 200,000 transactions in November. That's exponential growth in real-world usage. People are actually using the network. Kasia's encrypted, decentralized messaging proves that Kaspa's infrastructure works for way more than just money transfers. We're talking about censorship-resistant communication built on a blockchain that governments can't easily shut down. Meanwhile, daily Kaspa reports that exchange balances keep dropping. After that October price crash, you remember, the one that shook out all the weak hands, roughly 700 million KAS got pulled off centralized exchanges. That's massive. When tokens leave exchanges, it usually means holders are moving to cold storage for the long term. Classic accumulation behavior. And it's not just retail investors. Mara, yes, that Mara, the Bitcoin mining giant backed by BlackRock, Vanguard, and State Street, has reportedly accumulated at least 10 million Kaspa over the past 9 months. Mara only mines 2 digital assets, Bitcoin and Kaspa. Let that detail marinate for a second. Wall Street's biggest players don't waste resources on random altcoins. They mine what they believe has long-term value. Oh, and one more thing. Wallet number 1, the largest KAS holder, has been buying every single day since November 4th, added 2.1 million KAS just yesterday. Total accumulation during this streak, roughly 35 million tokens. Someone with serious capital believes in this project enough to keep stacking while everyone else panics. So we've got explosive network growth, institutional mining, whale accumulation, and tokens flying off exchanges. Common sense says the price should be pumping, right? Wrong, dead wrong. The Kaspa price keeps falling like it's got concrete shoes, down 70% from its July 2024 all-time high of 20 cents, bleeding through support levels that should have held, breaking the hearts of believers who swore this was the next Ethereum killer. Crypto Matt put it bluntly on X. You cannot have a crypto with such a strong community base, such strong tech and fundamentals, and make this make sense. He's calling it artificial manipulation, suggesting that whales and exchanges are quietly accumulating while keeping the price suppressed. And honestly, I can't completely disagree with him. The numbers don't lie. When you've got BlackRock-backed miners accumulating, when you've got the biggest wallet adding millions daily, when you've got 700 million tokens leaving exchanges, prices don't usually go down unless someone's deliberately holding them there. But before we go full conspiracy theory, let's talk about the other side of this equation, because there's always another side. Daily Kaspa pointed out that Kaspa consistently ranks as one of the top bullish cryptos on sentiment trackers, 3rd place overall. But sentiment doesn't pay bills. Sentiment doesn't create buying pressure. Sentiment just means people are talking about it. And here's the uncomfortable truth that nobody wants to hear. Sometimes the market just doesn't care about your fundamentals. Not yet anyway. So what's really going on here? Let me break down the 3 actual reasons Kaspa's price keeps struggling and why that might not be the disaster everyone thinks it is. First, the correction from an insane rally. Between October 2022 and July 2024, Kaspa exploded by 10,000%. 10,000% from fractions of a penny to 20 cents. That kind of parabolic move creates massive imbalances. Early buyers took profits. Speculators got shaken out. The market needed a reset. A 70% correction after a 10,000% rally. That's not a failure. That's completely normal market behavior. Bitcoin retraces 80% regularly during bear markets. Ethereum has done it multiple times. Kaspa's cooldown is actually healthy if you zoom out beyond the 5-minute chart. This isn't collapse, it's consolidation. The project's still building. Network usage is exploding. Real adoption metrics are trending up. When assets correct this hard while fundamentals improve, that's usually when the smart money accumulates. Which brings us to point 2. Second, limited exchange listings are choking liquidity. Kaspa's available on Binance Futures, sure, but it's not on Binance Spot, not on Coinbase, not on most major platforms where casual investors actually trade. According to industry watchers, this accessibility problem directly impacts buying pressure. Most retail investors won't jump through hoops to buy a token. They want one-click purchases on trusted platforms. Without those listings, Kaspa misses out on millions of potential buyers. Third, macro market conditions are crushing altcoins. Bitcoin dominance has been rising since mid-2024, sucking liquidity out of everything else. Only AI tokens, real-world assets and restaking narratives have shown real strength. Most altcoins, even quality projects, are bleeding. Kaspa's decline isn't happening in a vacuum. The entire market's rotating away from smaller cap plays into safer assets. This is macro pressure, not project failure. When Bitcoin dominance eventually peaks and capital rotates back into alts, projects with strong fundamentals and real usage tend to lead the charge. If I'm right about manipulation, and honestly, the data does suggest coordinated accumulation, then what we're watching is a textbook whale strategy. Keep retail scared, keep prices low, accumulate massive positions, then let it run when the timing's right. Mara didn't spend 9 months mining 10 million Kaspa because they think it's going to zero. BlackRock doesn't back miners accumulating worthless tokens. Wall Street's playing a longer game than your average crypto trader. They're thinking quarters and years, not days and weeks. The Kasia messaging protocol proves the network has real utility beyond speculation. When a blockchain can support censorship-resistant communication with 200,000 transactions in 1 month, that's legitimate product-market fit. Most crypto projects never get there. The exchange balance data confirms what's happening on-chain. When 700 million tokens leave exchanges post-crash, that's not panic selling. That's smart money moving assets to cold storage. Long-term holders don't keep coins on exchanges. They withdraw and wait. The institutional angle matters more than people realize. Mara's accumulation, backed by BlackRock and Vanguard, signals that traditional finance sees value here. Wall Street doesn't mine altcoins for fun. They mine because their risk models justify it. And that largest wallet adding 35 million KAS during a 10-day streak, someone knows something. You don't deploy that much capital into a falling asset unless you're extremely confident in what's coming. But I'm also not going to sugarcoat the challenges. Limited exchange access is a real problem. Until Kaspa gets spot listings on Binance and Coinbase, retail FOMO just can't fully materialize. The project really needs those gateways to tap into mainstream capital. The macro environment also matters. If Bitcoin continues dominating and altcoin season keeps getting delayed, even the strongest projects will struggle. Kaspa can have perfect fundamentals and still bleed if the broader market doesn't cooperate. So where does that leave us? Honestly, at a critical inflection point. Either this is the bottom of a healthy correction before the next leg up, or we're about to see further downside if macro conditions worsen. My read: the accumulation signals are too strong to ignore. When institutions mine it, when whales stack it, when tokens flee exchanges, that's usually not happening before a collapse. That's happening before a reversal. But timing is everything in crypto. This setup could take weeks or months to play out. Patience isn't glamorous, but it's how wealth gets built in this space. Look, Kaspa's story isn't over. Not even close. The price might be down, but the project's fundamentals keep improving. Network usage is exploding. Institutional players are accumulating. The largest holders are buying the dip aggressively. Does that guarantee a pump tomorrow? Absolutely not. Markets don't work on guarantees. But if you're trying to understand why the price keeps falling despite all the bullish signals, now you know. It's correction mechanics, liquidity constraints, and macro headwinds all colliding at once. The real question is whether you're patient enough to wait for the setup to mature, because if history teaches us anything, it's that the best entries often feel the worst. When everyone's confused and prices are falling despite good news, that's usually when opportunity's hiding. If you found this analysis helpful, do me a favor, share this video with someone who's been scratching their head about Kaspa, and check out my other videos breaking down altcoin cycles and market psychology. Thanks for watching, fam. Stay sharp out there. Quick reminder before you go, nothing in this video is financial advice. Cryptocurrency is extremely volatile and risky. You can lose everything you invest. Always do your own research, never invest more than you can afford to lose, and understand that even the best analysis can be wrong. Trade smart, manage your risk, and never let emotions drive your decisions. See you in the next one.